Yo, yo, what's up, everybody? How y'all doing? Welcome to another episode. And it's your boy, Darren B, representing Black Diamond FX. So tonight, I got a special request. Somebody wanted to know, what are order blocks? How do I find them? What do they look like? And the same with fair value gaps. All right. Now, this is important because order blocks, fair value gaps, they are part of the internal liquidity that I use to find my entries when I trade ICC, in between the correction and the continuation. So simply put, order blocks, an order block is going to look something like this. All right. Now, let me let you know, this would be a bullish order block here. We have bullish order blocks and we have bearish order blocks. All you do is flip them. All right. Same with fair value gaps. We have bullish fair value, we have bearish fair value. All right. So an order block is going to look like this. What is this? Engulfing candle. It's going to look like this is either bearish engulfing or bullish engulfing. And we're going to look at them in the charts as well. All right. But you're going to see where you're going to have the small candle. All right. Then you're going to have the long impulse, the candle with the volume. All right. Now, keep in mind that it can also be a series of candles, a series of like candles. All right. It can also be a series of like candles. All right. That's order blocks. Fair value gaps. Fair value gaps, you're going to have an order block and you're going to have that third candle. With a fair value gap, you want to focus on the first candle and the third candle. All right. And you want to see that gap in between the wick of the first candle, like this one, and the wick of the third candle. That gap in between is your fair value gap. All right. So with order blocks, what will happen is, let me show you guys right quick. You'll get price that comes. Okay. So let's say price was coming down here. Okay. Then we get our last down candle, and then we get our last down candle here, all right, and then we get our big impulse candle. So our order block is created. What will happen is price will come back down, trade into the order block. This is where we look for our entry, and then boom, take the trade up, all right. And opposite if it was a bearish order block. Now with a fair value gap, same thing. You have price will come down. Oh, I'm sorry. Wait. Price will come. All right, yeah, price will be coming down. All right. Then the you get the impulse candle here. All right. And then price will start coming down here. All right. Now, what will happen is price will price will give you this gap right here. It'll go up and then it'll come back down to grab the liquidity inside of this fair value gap. All right. Because all this is an internal liquidity, fair value gaps and order blocks. And also, I want to let you guys know when you have an order block, you want to see a fair value gap. All right. Because price can come to either or. Price can come to either the order block or the fair value gap. You can trade a fair value gap without an order block, but you don't want to trade an order block without a fair value gap, if that makes sense. All right. Let's go to the charts right quick, see if I can show you guys exactly what I am talking about. Let's see if we can find one right quick. Let me see. This is gold right here. Okay, so let's look at this right here. We're going to look at, come on. All right. So we're going to look at this section right here. All right. So you guys can see how price was coming down, right? So look at what happens. We got like a little order block right here. All right. Now, if I go in the higher time frame, these will probably be together. But remember, I said you want to have order block with a fair value gap. All right. Look at what happens. You have your order block. Let's see, the order block. All right. And we have fair value gap. All right. Now to confirm that when you get in to trade an order block, you definitely want to have that breaker structure and you want to have that fair value gap. All right. And then see how price came back. It mitigated the fair value and the order block, and then look what happened. Boom, price went up. All right. So that's how you find those. Let's see if we can find another one. This one here was similar too. Because look, see how we got order block, fair value, and then look what happened. Watch, let me mark it. Now let me tell you something. Those order blocks and fair value gap, well, those order blocks especially, you want to see them at certain areas. All right. You want to see them at other areas of liquidity. All right. Look, order block, fair value, price left. We broke structure here. We broke structure. Yeah, we broke structure here. All right. And then price came back up, gave you your entry, and then came on down. All right. And look, it happens all through here. All right. Now look, check this one out. This one here, the order block. Now, also, I said yeah, order blocks, but it can also be supply and demand zones as well. When I say order blocks, I consider order blocks and supply and demand zones in that same category. But look, look all in here. Look, we got order block here, fair value gap. Look what happened. Price came down. It went up, broke this structure right here, came down, that's your entry. Boom. Look again right here. This one here only came to the fair value gap. Now let's look at fair value. All right. Remember I said you can trade order blocks. When you trade order blocks, you want to have fair value, but you can trade fair value without order blocks. All right. But look, we do have order block here. All right. And we have fair value. Price came down here, gave you an entry, and then boom, went on up. Y'all see that? Now something that I want you guys to realize. I was in my Discord group earlier and I was trying to show this to them. See when you have the order block and price breaks it, and then look at what happened. See, we were going up, price broke through this order block, right? See how it broke through? All right. So once it breaks through, especially when you have these long candles, 9 times out of 10 is going to reverse. All right. And look what happened, especially when that order block is a swing point. This, excuse me, this is a swing point. All right. And then look what happened. And that's what I was showing my Discord earlier. Because the way we trade ICC, this would be, let me erase this. I'm going to show y'all. This would be, and hold on, watch this. All right. So came down, went up, came down, broke this low here. All right. This would be indication. All right. So look what happened. This indication violated this order block right here. Notice we didn't get a test and went up. It broke it. And look at the candles that broke. Every time we get an indication, I want y'all to look at the candles that broke. All right. Whether we get an indication to the top or the bottom, that will let you know 9 times out of 10 where price is going to go. All right. It takes a lot of money to break a swing low or a swing high. It takes a lot of money to break a swing point. So a lot of times when you see swing points broken, they're going to be these long candles, and price will continue in that opposite direct. I mean, in that direction, not the opposite direction, but the direction where the swing point was broken. Like this one was broken on a low. Look what happened. Continued low. All right. Look at this swing point. We got these two long candles. Even this one with a long wick. Swing point. Boom. Dropped. All right. You're going to see that very, very often. All right. Look, this is a high right here. Look how this high got broken emphatically. Boom. And look what happened. Order block, fair value. Price came down into the fair value gap this time. All right. It won't always go to order block. Sometimes it's going to go to order. Sometimes it will go to your fair value and then go up. Sometimes it's going to go all the way down. You just have to pick or try to decide which one are you going to trade, order blocks or fair value gaps. Either one. I mean, the advantage to an order block is that a lot of times you're going to get your risk to reward is going to be real good. All right. You're going to make more money on it. All right. But price won't always come back down to an order block. All right. That's the con. With fair value gaps, you can get in, but the bad thing is you got to put your stop loss way down here below the order block. All right. Because you don't know if price is going to come down to the order block or if it's going to stick with the fair value entry. You know what I'm saying? All right. But it's up to you to decide. I like order blocks. I trade fair value gaps too. It all depends. Now, let me tell you what I do, how I do my entries, how I enter. Watch this. So say for instance, let me find another one. I'm gonna find a clean one for you guys. Look, order block, see how it broke emphatically right here? And then it started consolidating. See, we started consolidation right there. All right. I'm gonna show y'all how I enter. I want to find a good one that's going to be clean and clear for you guys. Let's see, I might have to go back over here. Let's go to this one. Oh, that might be a little too far. Let's go to this one right here. All right. So that was the 1 hour. Hold on. I gotta do a little scrolling. Just bear with me. Where was that? Here. Right here. All right, right here. This is it. So look at this. I went a little bit higher time frame because I want y'all to see this. Order block, fair value. All right. So remember, we had order block up here. We had order block down here. All right. This one got broke. Look, check this out. So what I would do, well, on the 1 hour, remember, I'll mark this one. I would also mark the high up here. All right. I'll tell you what, let's go back to the one. I'm sorry, you guys. And it don't matter whether it's the 1 hour, 2 hour, three, four, whatever, as long as you're on the high time frame. All right. So we got a high here, we got a high up here, right? That's our swing. High up there. I'm sorry, a high and a low. Y'all got my computer acting up right now. All right. So look at what happened. We got our indication down, right? Our indication down here. So this is our indication that price is going to go lower. Price came up. Now you saw when I was on the 2 hour, we had an order block and fair value, right? Cool. That's higher time frame. That's the liquidity that we look for the price to go back into. All right. Now, once price get to that liquidity, that's when we drop down to that lower time frame. All right. So right now I'm on the 1 hour. Let's go to 30. Let's see. I gotta do some scrolling. All right. 30 minute. Let's go to 15. Let's see. Bear with me, bear with me. All right. And let's go down to 5. All right. Sometimes I go lower than the 5, like the 3. Sometimes I've even taken 1 minute trades. All right. And we're on the 5 minute. So let's see what the 5 minute time frame looks like. So what happened is when price get inside of your area of liquidity, fair value gap order block, now you want to start looking for bearish price action. All right. Now, as price is going up, we're going to make lower lows and lower highs. We already know that. Lower lows. I mean, it's higher highs and higher lows. I'm sorry. Don't mind me, y'all. But once price decides it's going to start coming down, we're going to start breaking those lows that were created, right? All right. So our first indication that price is going to go lower is when it breaks this low. Now, isn't this the same as what we marked on the 1 hour? Indication, indication here. All right. And then price pull back, and then drop. 5 minute. Look at what we got. Price came up, All right. It made this low here. All right. Right here. Let me make it bigger for y'all. All right. Made this low right here. All right. This low. Boom. I'm sorry. Made that low. Broke and closed below that low. Look what happened. Came back up. Once it break and close below here, that's our indication. You can get in there. That's an aggressive entry, or you can wait for it to come back up. Now, on the lower time frame, let's see if it's gonna give me 3 minutes. Let's see if it's gonna give me 3 minutes. Hold on a second. Because I want to see exactly what was in that 3 minute. Let's see. I want y'all to get this. I really do. And I hope this is clear and concise for you guys. Come on. I gotta do a little scrolling. 3 minutes is a small time frame. I don't know. All right, almost there. Almost. Okay, here it is right here. Boom. Look at what we got. Look at what we got. Check this out. 3 minute. Look at this. Look at this. Look at this. What I told y'all about order blocks and fair value gaps. Look at this. Order block here. I told y'all, man. Order block there. You can put your stop loss to the high. All right. Put your stop loss at that high. Look at what happened. This broken close came back right here. Also came back here. But your stop loss up here. And then look what happened. Fell from the sky. That's your entry. That's how I enter my trades using fair value gaps, using order blocks. All right. When you get in order block, you want to see fair value as well. All right. You want to see fair value. You can have fair value without order blocks, but you don't want order block without fair value. But that's your entry right there. Where do I target? Let's go back to the hour. That trade was, that setup was there. See way up here? Well, I could have targeted this low right here. Could have targeted this low. You could have targeted any of these. Honestly, your best one was probably this low right here. So, say for instance, I had gotten in there. Let me see something. All right, that was my order block, remember? The low of my order block was 41, 43.1. I want to see if I'd have got in with one contract on gold, targeted this low, what would I have made? So 41, 43.1 would have been my entry. 41, hold on. 43.1 would have been my entry. All right. And my take profit would have been, boom, this low right here, around, let's say 40, let's just say 40.95, 40.95, 0.95. Look at that, $4,800, $4,800 from there to there. Boom. And you're done for the day. And that's with one contract. That's with one contract, 4810, right here. One contract. Now that's one mini contract. All right. One micro would have give you $481. All right. But that's what I wanted to show you guys. Let's see if we could do one more. That's why fair value gaps and order blocks are important, because that's where you find your entries at when you trade ICC. That's your internal liquidity. All right. That's the internal liquidity that I look for, that I look at. All right. Price is coming down. Let's see if I can find another one. Hold on. Let's try. Let's look at ES. This is setup I got on ES. Let's look at NQ. I don't want to mess my setup up. Let's see something. Let's see. I want to see something that happened. All right. Let's look at this right here. Perfect. So look, You can see price was going up. Boom, breaking highs, breaking lows. All right. And look what happened. We got, we broke this high, we came up, and we pulled back. Now, if you don't know, every time price, if price is going up, every time we break a swing point, that's an indication whether the price is going up or down. Every time you break a swing point, that's indication. So look what happened. Came up, created this low. And then look what happened. We broke that high right here, came back. Where did we come back down into? Remember, I was telling y'all, order blocks and fair value gaps. This is a big fair value gap right here. Watch this. 2 hours. Boom. Fair value right there. And this is a rejection block right here. There's probably something. Let's see if something was inside of this rejection block right here. Right there. Because I see we got these wicks. Let me see something. Let's go to the 30-minute. Let's go to the 15. I just wanted to see if there was something inside that rejection block. Got another little one right there. Stop moving. Stop moving. Let's go to 5. All right. Let's see what we had. 5-minute time frame. I mean, not much. Not much. Let's go back to the 15. Let's go back to the one where we were at. All right. And hold on. Was this it? Yeah, this was it. We came down. Let's see, 30. 30 minutes? Yeah, okay. Wait, no. All right, I'm lost now. I'm totally lost. Okay. I was looking at the wrong thing. Hold on a second, y'all. This was what we were supposed to be looking at. 1 hour. I'm sorry. I'm looking inside of here, but it broke up here. This was indication, came down here. I'm sorry. All right. But see, we got these consecutive candles here. So your fair value gap here to here, boom, that's your lowest fair value gap right there. All right. Or you can do it from the whole, from here to up there. All right. Because this, picture this 1, 2, 3 black candles as just one candle. All right. Boom. Fair value gap, order block here. This is one that never came back to the order block unless you had a little tiny one right there. But look at what happened. Hit it. Boom. Broke this high right here. That was your target. That high. All right. Let's see. I know that that one was kind of messy. Let's see if we could find, let's look at, I mean, I only really trade GC, which is gold, SI, which is silver, ES, which is the S&P, and NQ, which is the NASDAQ. All right, let's look at it on Forex. I know we got some Forex traders in the house. Oh, look at this right here. This I was showing this to my Discord earlier. Look at this. This was on a 4 hour. Bullish indication. Price came down. Look at that. Remember I said we can have fair value without order block? This is perfect. The perfect example right here. Fair value gap between here and here, no order block. All right. Unless you can consider this a order block because we got all these consecutive black candles. All right. Quite possibly, but you didn't have to. And then look, we get a liquidity sweep inside. Okay. Now let's look for our entry. Our entry is going to come here. This is inside liquidity, right? That's why we look for our entry inside liquidity. Let's go to the one. You're looking for an entry up in here. Let's go to the 30. I don't look for entries on the 30 one, like 15. Not even a 15. I prefer the 5. Let's go down to the 5-minute. Here. And the 3. I know we're going to find something on the 3. Look at this. Watch this. The magic of ICC. Check this out. We had it. This was the Come on, stop moving. Stop moving. All right. Look at this. So we got this low right here, right? Look what happened. Price came up. All right. Came down. Came up. Broke this high, broke this high. What do we have? Fair value. Boom. No order block. We got fair value between here and here. Fair value here. There. What we got? Price came down into it. This is your entry right there. This is what I was showing my Discord earlier. And then look, after that, it was all money from here all the way up there. All right. Now I think price is gonna see. I can have this fair value gap right here marked out. I think price may come back down because now we have bullish indication here. This is GBP JPY. I think this is going to happen maybe Sunday or Monday. So you see we have bullish indication here. All right. Um so I think price is going to come down into here and perhaps go back up. Now, I want you guys to look at this as well. So I had this mark, the low and this high, right? See, we had bearish indication here. Then we got bullish indication. All right. Now, if this bearish indication was valid, this was my liquidity area I was going to look to take a trade from. All right. But look at all of these consecutive candles going up. See how it smashed through there? So that let me know that this is perhaps going to be bullish and we got a reversal right there. And then look, we got bullish indication as well. So now we got bullish indication. I'm looking for liquidity to support that. And what do we have? Fair value. And what I'm looking for. Now I'm not trading this, but for my Forex traders, I'm looking at this, boom, and then probably continue going up some kind of way. All right. But that's how I use order blocks and fair value gaps for my entries, you guys. Um, it's clear. Oh, well, to me, it's clear, but for some of you guys, it might not be as clear. So what you want to do is get in your charts and practice. And look, first of all, practice spotting them. All right. Look at this right here. Practice spotting them. Let me clear this up a little bit for you guys. Let me do some erasing. All right. Fair value gaps, order blocks. All right. Fair value gaps, order blocks. They're going to flip. Matter of fact, yeah. So your order block is going to do something like this. It's going to come back down. Hold up. All right. So your order block is going to come back down. Price is going to come back down. Give you an entry. Remember, you want to go to that lower time frame, 5 minute, maybe even 3. Take your trade going up. All right. Fair value gap. Oh, and with the order block, you want to have fair value gap as well. Remember that. You might have a candle here, wick. All right. Fair value. With your fair value gap, price, you want to see price come back down, trade into it, or perhaps even lower into your order block. And then boom, enter. If it's look inside, once they get in your fair value gap, start looking for bullish price action or whatever price action that supports your bias. All right. Same thing in the order block. All right. But if you guys have any questions, please do not hesitate to ask. I hope I didn't confuse you guys too much. Um, I know I got a tendency to kind of not go off topic, but some people might not really understand. I have a tendency of speaking to what I'm trying to say is my level of understanding. All right. So I try to keep it simple, but if not, let me know and I can break it down even more. All right, make it a little more simpler. But if you like this video and if you found it helpful, please hit that thumbs up. Don't forget to subscribe, share with 100 of your friends. Holla at your boy.